Should I buy a house now or should I wait? When's the best time to buy real estate? Should I rent? Should I own? We are asked those questions all the time. This week, my wife and business partner Samantha had a great Facebook post where she told a story and she had an answer. What's the answer? Well, the best day to buy real estate was yesterday. Today's the next best, and tomorrow is an option. This week's total cost analysis is going to take a look at a rent versus own scenario for a subdivision in Sterling, Virginia, Cascades. Recent rental, $3,000 a month. Recent sale, same street, same subdivision, $599, call it $600,000. So we're comparing a rent scenario with a 20% down purchase, 10% down purchase, 5% down purchase. Yes, we all know rates have been moving around a lot. This is looking at a Fannie Mae, Freddie Mac first-time home buyer conventional loan. We've got the payments, and yes, the mortgage payments are going to be higher than a $3,000 rent. We all know that. But what that is not taking into account are the benefits of home ownership. Number one, tax benefit. Yes, the renter is going to pay taxes, so they will have a tax deduction, assuming a 24% bracket income level. The homeowners are going to have a higher tax benefit because they have the standard deduction, plus they can deduct mortgage interest and mortgage insurance if there is any on the loan. But what we also want to look at is the renter is paying $3,000 a month to someone else's mortgage, where the homeowners are going to be paying principal each month, which would go obviously towards them building equity. When you get down to it, the net monthly payment, taking into account tax benefit and principal paid, is pretty close, purchasing versus renting. Still a little bit more, $188 to $600 a month difference in payments. But what this also is not taking into account is future money, future equity. In 5 years, the renter would have paid almost $193,000 in rent, nothing to show for it. The homeowners would be pocketing $25,000 to $30,000 in equity from simply principal paid. That's not appreciation, that's simply principal paid. Now we go forward again, 10 years in the future, looking at net worth, which is taking into account equity paid, principal paid, and also home appreciation, assuming a modest 3% appreciation rate. The renter, net worth, zero from real estate. The homeowners are going to be in the almost $500,000, $445,000, $420,000 range, depending on down payment, etc. And this does not even take into account the opportunity to refinance, which we don't know when that'll be, but it will happen at some time. Moral of the story, as Samantha said, when's the best time to buy real estate? It was yesterday, but today is still an option and tomorrow is still an option. If you'd like a total cost analysis for a rent versus own scenario or different purchase scenarios, just give me a shout.